Namaste, welcome to Arthaniti, where we discuss money and money matters to help you in your investing decisions. Today, in this Friday Fusion episode, we will delve into four different aspects of the financial world. Firstly, we will discuss about a concept in the concept corner, a new concept which, as investors, we should be aware of. Then we will talk about market movers, what news and corporate actions led to movements in the market, and as investors we should be aware of it. Next, we will delve into a jargon, in the sense a financial term which is commonly used but which you might think as confusing. We will try and explain that term, and lastly we will wrap up this episode by some wisdom of well known successful investors. So let's start. Today, in the concept corner, I want to discuss a term that has been in news since yesterday. The term is mental coaching. Now, you would wonder, why am I talking about mental coaching when I normally talk about how to invest, where not to invest? But I will come to that part later on. Right now, let me tell you the context in which I am talking about this term. Yesterday, our very own 18-year-old prodigy from Chennai, Gukesh D, became the youngest world chess champion. Now, his victory is credited not only to his moves on the chessboard but also to his mental strength. His mental coach, Paddy Upton, has said that Gukesh's self awareness and emotional control were major contributors to his victory. Now, Gukesh himself has credited his mental coach in his press conference. If you have followed this 14 match world championship, 14 game world championship, you must have read that Ding Liren, the erstwhile world chess champion, made a blunder in the last game, and Gukesh won the championship. Now, Ding Liren is equally skilled and equally trained as Gukesh D is, but his nerves had much to do about that blunder that he made in the last game. That is the difference between a world champion and the one who lost that game. So, mental coaching, mental toughness is very, very important when it comes to chess as well as when it comes to investing. Now, like chess, where the stakes were high, it was a world chess championship in investing as well. When you are to make decisions whether this is the right time to invest, whether this is the right time to sell, your mental control, emotional control plays a very, very important part. Just like Gukesh was facing a tough opponent, we as investors feel the pressure when the market starts to dip. What we end up doing? Well, we end up doing exactly what we should not. We end up buying when the market is rising and selling when the market is dipping. What we should do? Exactly the opposite. Why do we do it when we know that that is not the right way? Well, our nerves come into play, the logic is left behind and the fear factor takes focus. Do you know that our brain takes on an average 35,000 decisions in a day? Imagine if we are able to control at least a few thousands in of those decisions, what can be the impact on our life? Right, a study again has shown that if you have emotional control in investing, your returns are increased by roughly 1.5%. Well, 1.5% might seem like a small percentage growth, but imagine this growth over a period of 20 years. It is the difference between a decent retirement and a luxurious one. Well, it is a very simple choice to make. So, like Gukesh, self awareness and emotional control backed by solid hard work, in our case as investors, by solid research, is going to help you and me to keep our nerves calm. And that is going to be one of the ingredients of our investing success. In the next section, let us see the top three market movers this week. The first, as we all know, I have made a video about it. the RBI shocker, the Reserve Bank of India, kept the interest rates unchanged for the sixth time in a row. Now, what does this mean for our loan and fixed deposits? Well, our EMIs are not changing, and neither are our FD rates. What do we do then? Well, come February, it is expected that the new governor who took charge from Shaktikanta Das will make changes and ease the current policy of RBI. The second market mover that I want to talk about is Bajaj Auto. Now, as per the latest Vahan registration survey of November 2024, Bajaj Auto, the Chetak EV by the Bajaj Auto from the Bajaj Auto stable, has the market share has increased to 22% as compared to 20% in November 2023. Whereas Ola Electric, which is a market leader in this segment, has seen a decline of nearly 33% of its market share. In one of the events hosted by CNBC TV 18, the Bajaj Auto chairman took a jibe at Ola, saying that Ola to Ola hai, Bajaj Auto Shola hai. Now, this only suggests that the competition war in this segment is intensifying, and it is good news for we as consumers. Now, this week also saw an unrest in the Syrian capital of Damascus, where the existing leader was overthrown by rebels. Now, why should we sitting in India bother or worry about this? Well, this is going to have an impact on the global fuel prices, and many Indian companies will feel the heat. This has a potential of denting our economic growth as well. Energy and aviation stocks might see some turbulence because of this unrest. In the third phase, we will discuss a financial jargon. Today, we will discuss circuit breakers. No, I'm not talking about our home electricity. Circuit breakers that I'm talking about are related to stock markets. Like we have timeouts in cricket matches, circuit breakers are a way of the markets saying that time to halt, time to take a deep breath and then restart. When market moves too fast in either direction, up or down, trading is halted to prevent panic. This is what is a circuit breaker. Now there are three levels: 10%, 15%, and 20% movements in Sensex and Nifty. Do you remember the March 2020 crash following the COVID outbreak? Well, we had hit circuit breakers then. It is the market's way of saying, relax, take a chill pill, take a deep breath, and then we will restart again. Before we wrap up this episode, let us talk about some wisdom from seasoned, successful investors. First, I want to quote Warren Buffett, who says stock market is a device to transfer money from the impatient to the patient. Our very own Rakesh Jhunjhunwala also says something on similar lines. Emotional investing is a sure shot way to lose money. Now, both of them are if I say so, in case of Rakesh Jhunjhunwala, were seasoned investors. Both of them have been highly successful in their trade. They also corroborate, they also support mental toughness, they also support stability in thought, not panic, to be one of the ways to achieve success in our investing journeys. So, just like Gukesh, just like what Warren Buffett has said, or Rakesh Jhunjhunwala has said, it is very necessary, and let us think about it over the weekend how we can build our mental toughness and remain calm and positive in the investing decisions that we take. So, the gist of this episode is stick to your investment plan. Just like Gukesh, be calm, calculated, and think three moves ahead. I hope you like and enjoy this episode as much as I enjoyed recording it. If you find this helpful, please like, share, and subscribe to my channel for more such informative and educative videos. Together, we will make our investing journey successful. Stay safe, have a great weekend. Goodbye.